tomorrow? Okay. Can you hear me clearly?
Yes.
All right. All right. So what I'm going to do today is actually to just go through your group exercise 3 because we did not manage to do the tutorial in class. So I will just go through the GE3. All right. Hopefully you can benefit from this discussion. So let's look at the question here. We have Ting Sendian Berhad. All right. Commence business. So whenever you go through, you have to try to highlight those information. So you commence business on 17th of May and first set of accounts was prepared to 31st October 2016. All right, and 31st October for each subsequent year. But in August 2018, the company became a subsidiary of Konda Kondi Berhad and required to change its account its year end to March 31st, and from there on, the company closed their accounts on 31st of March. But the accounting period adjusted loss of TSB were given as follows: your adjusted income and losses. So the first period given was from 17th of May. So 17th of May is the commencement date. So whenever you have the commencement date, all right, that will be the first day of your basis period. So you're given up to year end 31st October, but then there's a change of accounting. Right, accounting periods where you have 1st November 2017 to 31st March 2019, and the adjusted income for the period is 350,000. And from there on, you close your accounts for 12 months, closing on 31st March 2020, 31st March 2021. All right, on the first part of the question, it requires you to determine the basis period and adjusted income for each of the relevant years of assessment. So the first part of the question, I will just go through directly. All right, so given this accounting period and there is a change in accounting year end, and you have to look first is that for the new accounting period, so you have highlighted this accounting period, check the period, is it more than 12 months or is it less than 12 months? So you're talking about 2017 to 2019. So this is more than 12 months. Yeah. So when it's more than 12 months, then the second one is that you check, is the new year end, all right, the 31st March 2019, is it closed in the following year or in the third year? Following year means that, all right, the previous year was 2017, following year is closed on 2018. But in this scenario, all right, you close your account on 31st March 2019, so that is in the third year. So the law says that if the account is more than 12 months closed in the third year, so what you do is that you're going to break this period into two periods. All right, as you can see that you have 2017, 2019. So they are missing there. You don't have 2018. Yeah. So that's why this period will be broken into two periods. So you have to check. Number one is that how many months is this? Right. I think that the period is 2017. You have November and December. So that is 2 months. And then 2018, another 12 months. And in 2019, you have 3 months. So 2 plus 12 plus 3, how many is that? 19 months. All right. So these 19 months, you're going to divide that into two, right? So you're going to divide this into two periods. One is 9 months, all right, and the other one is 8 months. All right. So can you have the period 8 and 9 months? Yes, you can. All right. Yes, if you have your answer 8 months and 9 months, that is also acceptable. But in practice, normally we have the longer period as the first year of assessment and the shorter period will be the following year of assessment. But again, it's okay if you have it in 8 months and 9 months, right? So I accept both answer. So when you have that period, all right, for 9 months and 8 months, so you're going to break up this period accordingly. So the first period will be for 9 months. So it means that it starts from 1st November 2017 until 9 months, maknanya 31st of July 2018. Yeah, so the answer here, you see that the first period, all right, no other changes for the first YA, right? But the period that you have the new accounting, so you're going to divide that into 2 periods, all right, until 31st March 2018, and that is for 9 months. And the second period is from 1st October 2018 to 31st March 2019, and that is for 8 months. And you are given that the income for the 19 months period is 350,000. So when you break up the period into 9 and 8, so is the adjusted income. Alright, so 350 times by 9 over 19. So that's how you get your 185,294. Is it 19 months or 17 months? 17 months. Mana datang 19? 17 months. Alright, please. Yeah. It's not 19 months. It's 17 months. Yeah. July, November, December plus 12. So I kena buat 2 plus 12 plus 3. So that is 17 months. So that's how you have 9 and 8. So 9 plus 8 is 17. So you apportion the income accordingly. Yeah, 9 over 17, and here is 8 over 17. I do not know, we have a group that have 9 and 8, but this amount is not right. I do not know how you actually apportion that. So be careful, all right, because it's just a simple mistake, right? So the total here is 6 marks, right? So that's it on the accounting period. So that is the first part, your basis period for the respective year of assessment and the respective adjusted income and loss. Is that clear? Yeah, I think that most of you got it right. All right, so then, all right, whenever you have this capital allowance, all right, you will attend each of the asset individually. So the first one is that you purchase furniture on 1st of May. So noted that 1st of May 2015, you have not actually commenced your business, right? You commence business on 17th of May. But if you have incurred capital expenditure prior to your commencement date, so whatever, yes?
Ada share screen tu.
Am I not? Oh my God. Kenapa cakap lambat? Ya, I tunjuk. Okay, tadi I tunjuk kat sini ha. Tak nampak Okay, do you have any question on this? Okay tak? Can you see this clearly?
Okay,
betul.
Alright, so alright. Sorry, lama dah tak ngajar online pula kan. Alright, for the first one, furniture, alright, again, if you have incurred your capital expenditure prior to commencement date, whatever expenditure is deemed to be incurred in the first year of assessment or in the first day of your commencement. So here the 35,000 will be claimed in YA 2016. So here is 2016. Yeah, the first YA is 2016. So the qualifying expenditure is 35,000 and it's a furniture. So furniture, you should know what is the qualifying, what is the IA and the AA rate. Yeah. And the furniture was later disposed on 17 November 2017 for 23,500. So there's a disposal on the asset. All right. So if you were to do the columnar format, all right, it's always like this. So for the furniture, all right, first identify what is the QPE, all right, that is 35,000. And then the IA and AA will be 20 and 10% for furniture. So when is the first year you're going to claim? You're going to claim in 2016. So even though you incurred on 1st of May, all right, it's deemed that you incurred in YA 2016 because that is the first year of assessment, all right, based on this one. The first year that you're going to have your basis period is YA 2016. So that's when you incurred or you claim your capex on your furniture. All right, so QPE, and then you claim 20% and 10% in 2016. But in when you dispose on 17 November 2017, so how you decide which YA is that? You have to go back to your basis period. So 17 November 2017 is here, all right? So it falls in this period, isn't it? 17 November 2017. 17. So that is YA 2018. So when you dispose in YA 2018, you cannot claim any annual allowance. But in the year of disposal, you're going to compute your residual expenditure. So how do you compute your RE? RE is actually your QPE minus all your allowances that you have claimed. Yeah, so that's how you get RE of 21,000. Here you have 14,000. Your QPE is 35,000. So that's why your RE is 21,000. And then you compare that with your disposal. In this case, then dispose of, where do you get the 23,500? What is this? Insurance compensation. Ada mention ke insurance compensation? It's not mentioned, right? Mana datang insurance compensation tu? Disposal value is 23,500, right? So from there you get a balancing charge. Why? Because your disposal value is more than your residual expenditure. In other words, balancing charge is a gain on your disposal, right? So once you have a gain, so this one, remember that this one is in 2018, right? So 2018, you are going to have a balancing charge of 2,500. So remember that, because this will bring into your computation later. All right, for the second item, you have a machine. It's a general machine. Yeah, so whenever you machine, you highlight whether is it a normal machine, a general machine, or is it a heavy machine. Because if general machine, the IAAA is 20 and 14%. But if it's a heavy machine, that is a 20%. So you purchase a machine that costs you 200,000, and then you incurred installation cost. So remember that installation cost is part of the qualifying expenditure, and it was given that the installation cost is 20% of the cost. All right, and then you also incurred 31,000 for leveling of land. So this is what we call PCTL. All right, the preparation. What is that? Preparing, cutting, tunneling, and leveling of land to prepare site for the installation of the machine. So you have PCTL here. So whenever you have PCTL, all right, then you have to do a 10% test, right? So, and then the 10% test, why? Because if the PCTL is less than 10% of the total cost, then the PCTL will be part of the qualifying expenditure. But if the PCTL is more than 10%, then the PCTL is a non-qualifying expenditure. So for example, here the cost is 200,000. You have 20% installation cost, 40,000. Cost of preparation is 31,000. Total cost is 271,000. So you have to check this PCTL whether the 31,000 is more than 10% of the total cost. So you know total cost is 27,100 or 271,000. 10% is 27,100. So this is more than the 10% value. So because of that, the PCTL, all right, is a non-qualifying expenditure. So I call it as a PCTL. Yeah. So it's a non-qualifying. So what is the qualifying expenditure? It's only the cost and the installation cost. Yeah. So in that case, you have a qualifying expenditure of 240,000 instead of 271,000. I do have most of you, I think you got it right. It's just that some of you did not actually explain what's the implication of having this 10% PCTL, yeah, the tax. So you have to explain a bit whether the PCTL is a qualifying or non-qualifying, right? From there, you got your QPE, and that's the tax rate. Sorry, not a tax rate, the IA and the IA and the annual. And then you start claim in 2017, because you have to look at when you actually incurred. You incurred that on mana? 21st of December 2016. Alright, December 2016. December is 2017. Right, so it's here. So you have to check the period when is the year of assessment. So if the date fall into this period, so means that it's 2017. So that will be the first year that you're going to claim IA and AA on the asset. Alright, so you claim in 2017 and you claim AA in 2018. When it comes to 2019, again, how do you know it's 2019? When is the disposal, right? 5th June to 5th January 2019. 5th January 2019 is here. 5th January, yeah, it's here, 2019. Yeah. So 2019, you dispose of the asset, so there's no allowance claim in the year of disposal, but you have to claim, you have to compute your RE. So again, RE is your QE minus your qualifying, whatever total allowance that you have claimed throughout the period. All right, compare that with your disposal value. In this case, you sold the asset for 110,000. So you will have a balancing allowance. In this case, this one is a loss on disposal. So remember that loss on disposal later will be brought into your computation as a balancing allowance. All right, it will be deducted against your adjusted income. So far, so good. All right, I think that is still fresh in your mind, but I just want to make it clear. All right, for the next item is your machine. All right, because on the same day, you purchase a machine, a new heavy machine. So heavy machine implications is that IA is 20%, AA is 20%. But this one is on higher purchase. So when you have a higher purchase, then the computation is a bit different. Yeah, so in this case, you have a cash price and higher purchase price. The difference between cash price and higher purchase price is that there's an interest portion in the higher purchase price. I remember that for capex, it's only the capital portion that is included. The interest will be claimed as a deductible expenditure. So we only want to know what is the cash price, 500,000, and you paid deposit of 110,000, and the balance will be paid over 48 months. Even though you are given the installment payment of 8,542, all right, in February, but you have to check what is your capital portion of your installment payment. So to do that, you have to do a computation, right? To do that, you have to show me that this is the cost of the machine minus, all right, I would normally do like this. Cost is 500,000, all right, and then deposit, all right, you pay deposit of 110,000. So the balance, all right, which is 390,000, all right, will be paid over 48 months. So that's how you get your monthly payment of 8125. So you show me your computation. There's a one group that do actually 500 minus 110 over 48. You do it horizontally, all right? If you do it something like this, it will be better, right? It will make it more presentable, and then it's easier for you also to check on your computation, right? So just do it, just show your workings, yeah? And show me how you actually compute your installment payment, all right? Installment per month. 8125, yeah? So normally there are two ticks here for you to compute your installment. From using the installment payment, you have to compute what is your qualifying expenditure for the first year. And remember that for 2019, not only you pay deposit, but you also pay installment. But the installment starts in February 2019. So 2019, the period is that you only have, you close 2019 close on 31st of March. So that is February and March. So there are 2 months only in 2019. So the installment payment is only for 2 months, all right? And then you also have your deposit. For that, all right, 126250 would be your QPE for 2019. All right, and you are going to claim that in the first year, 2019, 20% each, and annual allowance in 2020 and 2021. But for the following year, remember that the installment payment is 48 months, so it means that you still pay 12 months in the YA 2020. So what is the installment payment? 12 months times by 8125. So you get 97500, the QE for 2020, and similarly for 2021 you have another 12 months. All right, you still have to pay in 2022. All right, because it's 48 months, but because the question only require you to do tax comp for until YA 2021, so you don't have to do 2022. Right? So And remember that under hire purchase, you always have for the first payment, all right, the first year that you incurred QE, you claim IA and AA. All right, do it like that. In the second year, you incurred another 97,500, you claim IA and AA on that amount in YA 2020. Right, IA, AA, and then another AA in 2021 of the 97,500. Come to 2021, you incurred another 97,500. Again, you claim IA, AA in 2021. Right, so because the question only asks for 2021, so you don't have to show me the following years lah. All right, so there are group that is really need to look into your hire purchase. All right, because most likely question will come out on hire purchase as well. All right, and this is a machine, so there's no restriction. All right, regard to the passenger, unless it's a passenger car, then there's a restriction on how much you can claim on the qualifying expenditure. It's a machine, so you just do a normal computation. Anyone who's not clear about the way for you to compute your hire purchase, you let me know. Any question? All right, show me. All right, I think that a few group that actually don't show me clearly how you compute your installment payment, so you are losing 2 marks there. All right, 2 ticks there. I don't give. All right. All right. Anything else? No. Okay, the next one is on the computer. All right, a computer was acquired in August 2019. All right, so I think that is YA 2020, costing to 7,000. However, it was unsuitable and disposed on 16th of March 2021. But the RB do not accept, all right, the reason for the early disposal. So in this case, the disposal is without commercial justification. So because of that, all right, you have to check how long is actually the acquisition of the computer. So you purchase in August 2019 and you dispose in 16th of March 2020. So let's look at the year of assessment. August 2019, all right, is YA 2020. Yeah, why? Because your year end is 31st of March. So because of that, YA 2020 will be the first year that you're going to claim allowance on the computer. Computer, again, the qualifying, the QPE is 7,000, IAAA is 20% each, and you're going to start claim in YA 2020. All right, so 1,400 and 1,400. But when it comes to the following period, it means that in 16 March 2021, that is the following period. So the period that you hold the asset is less than 2 years. So whenever there's a disposal, you cannot claim anything in 2021. But because it's a disposal within 2 years without commercial justification, then you have to apply a clawback. So what it means by a clawback, whatever allowance that you have claimed on the asset will be treated as a balancing charge in the year of disposal. So in this case, you have to explain to me a bit why you have to claim a balancing charge, right? Then you have to mention about clawback, right? Other group that did not actually give explanation, so I don't give tick for that. Right? It's only one tick lah for the clawback. Okay, understood? And the next one is that we have a Honda Jazz. All right, Honda Jazz is a passenger car. Right, so passenger car, remember that for the purpose of capital allowance, you have to be aware that there are 2 types of passenger car that cost you 150,000 and below, or anything above 150,000. So if the cost is 150,000 and below, you can claim up to 100,000. But if the cost is more than 150,000, you can only claim qualifying expenditure restricted to 50,000. So what happened is that in this case, all right, you have a passenger car that costs 86,000, a down payment of 14,000. So this again is a higher purchase. And you have installment payment of 2,600. Again, all right, this one is inclusive of interest charges. Right, paid beginning of July 2020. However, the RB said that only 2/5 of the car usage was for the marketing, agreed that 2/5 of the car usage was for the manager's personal purpose. So it means that if it's for personal purpose, for the business reason, you can only claim 3/5. Alright, because 2/5 is for personal. So what you can claim is only 3/5. Yeah, means that the balance is for business purpose. So for the Honda Jazz, alright, remember that the cost is 86,000. You paid a deposit of 14,000. So again, alright, I would prefer you to show me your workings in such a way. Command C, I will put it like this. Alright, so how much is it? 86,000. And you paid deposit of 14,000. So the balance is 72,000 over 36 months. So you get a 2,000 installment payment. Yeah, the 2,000 installment payment. In the first year, you pay deposit of 14,000, but how many installment? 9 installment. Why? Because you start paying in July 2020. So year end is 31st March. So July, October, September, October, November, December, January, February, March. So there are 9 months there. Right, so 9 months times by 2,000 installments. So you get a total of 32,000 qualifying expenditure claim for the 2021. So the 32,000. The rate is 20%, 20%. But remember that out of this 32,000, the one that you can claim for business purpose is 3/5. Right, so you're going to apportion that. Right, here either you claim accordingly and then show apportionment of 3/5. That amount is 7,680 that you can claim, or another group that actually do 32,000, dia times 3/5. Siap dah. Either way, I do accept as long as you understand that the amount that you can claim is only business purpose. Right, so claimable is 3/5. All right, the more importantly is that on the presentation or on the application of what you have computed from the top, right, you are given, for example, the first part requires you to determine the adjusted income. Right, so the adjusted income is already computed. So what you should do is that, because the question asks you to compute the statutory income for 2016 to 2021. So what adjusted income here should come from the top, right? So whatever figure there, you just plug in. So you may have a wrong figure, for example, the one that you have to do adjustment. Remember, for the period that you have to do adjustment. So if you got it wrong at the top, so here also might be wrong. Yeah, but I only give tip for the term here, the adjusted income, because this one is actually a repetition from the top, so I don't give double tips for the same answer. All right, and then I also have the add balancing charge. I will only give balancing charge if you show me correctly that the balancing charge is actually claimed in the right year of assessment, which is in 2018 and 2021. So where do you get this balancing charge? I think that that is the first disposal. 2005 is here on the furniture. All right, so that is in 2018. So you bring that balancing charge in 2018. And another one, I think that we have a balancing charge on the clawback, which is in YA 2021. So that's how you reflect whatever computation you have in the tax computation, right? And remember that if you have your adjusted income here as a negative something, because you know that the first year, the second year, you have negative 110,000 is a loss. If you show me negative 110,000, do you think that is right or wrong? Can I have adjusted income negative 110,000? Right or wrong? You can never have a negative income. Right, so if you have a loss, then you have to have adjusted loss, another line, you put loss amount. But your adjusted income, if you have a loss, your adjusted income is nil. So if you put it as a negative there, I don't give tick for you. Yeah, and then you should have the brought forward figure and the current year and how much is the balancing allowance. Remember, balancing allowance apa ni? Kenapa RE kat sini It should be balancing allowance, ada kan? Daripada mana balancing allowance can... Mana balancing allowance? This one, 14,800. But this one is negative lah. Right? 14,800. I give a tick on the term here, but I have to make sure that you actually claim in the right year, even though the figure may be wrong, but because it's own figure, right? So as long as you showed me that you claim balancing allowance in 2019, I give you a tick. All right, and then of course, because the computation requires for statutory income, so the amount of statutory income must be correct. All right, for the first year, no problem because most of you got it right. But the second year, all right, you have no brought forward figure, but remember that the current year you still have 2017 as your total allowances. Ya, I tak kira lah pula kat sini. Ya, so what is your total allowances? So sometimes you can have a table to show me the total allowances. Ya. Kenapa kat sini tak nampak 2017? So how you compute 2017 is, say for example here you have 3,500 plus another 48,300, alright, and then you have not here 2017, that's 2 lah, right? So that's how. But because you don't have any income in 2017, whatever allowance that you have will be carried forward to the next year. Next year becomes a brought forward capital allowance, right? And we'll together with the current year allowances, you have a statutory income of 69,000. And remember that 2018 you also have a balancing charge. So I do actually take the correct figure for this, and that carries 6 ticks on that. Right, so from all the computation, all right, normally what we are looking at is that you must show me that what is the qualifying expenditure, right? The QE and the rate, and what is the year that you claim for your capital allowance. And when there is a disposal, you have to show me your RE or disposal value, whether it's a balancing charge or balancing allowance. All right, if there is a higher purchase, or in this case, the 10% rules, so you have to show me your 10% rules and explain a bit whether the PCTL is qualifying or non-qualifying expenditure. And similarly, decide on your QPE, show me your rates, and then what is the year of disposal, and year of the first year that you claim, and there's a disposal, show me your balancing charge and balancing allowance. Whenever there's a higher purchase, all right, show me your cost and the deposit amount that you paid for the item, right? And then what is your installment payment, right? Using that installment payment, compute your QE for the first year, and remember that under higher purchase, first year you do have a deposit, right? That is part of your qualifying expenditure. Computer in this case a clawback issue, so check if it's within 2 years period, you have to claw back. If it's without commercial justification, all right. And then you have again, this one is an installment payment. The difference here is that 2/5 is for personal usage, so whatever you claim is only on 3/5 of that. All right, and don't be very careful whenever you are required to compute your statutory income. Plug in the information from the computation at the top, all right, and then you compute your SI accordingly. So whatever you get, there's supposed to be 50 ticks there, all right, and then your GE carries 5 marks, so whatever you have, divide by 10, so that will be your GE3. Any question? All right, the rate will be given in your exam, so don't worry about that. What else? Is it clear now? Do you have any queries? No. So if you don't have anything else, I think that's all for today. So I wish you all the best for your exam. I'll see you inshallah tomorrow. With that, Assalamualaikum warahmatullahi wabarakatuh.